1,000 shares of SCHD. I'm not there yet, but that's my goal, and I will share where I'm at a little later on in this video. I made a big purchase today, and I will give you some numbers. And I want to tell you, I think now is the time to buy SCHD, and I'm going to tell you why and get right into it. First of all, SCHD got hit by the bank liquidity issues as the financial sector was its largest sector, and it has since trimmed that to be its fourth largest sector, but it's still heavy at 13.57% of the fund. You will see there's no financial stocks in the top 10 anymore, but I believe that banks will rebound along with the financial sector, and SCHD will benefit big since it's still a big part of this fund. And I think that's why they're holding it kind of towards the top, because they probably feel the same way, but they wanted to lower some of that risk. So this is reason number one. I think we're at the bottom of this crisis. It's going to start to rebound and push this stock price up, this ETF. Next reason is the Fed has been raising rates over the last couple of years, in fact 10 consecutive times in a row, and it's causing investors to move money out of funds like SCHD, which pays right now a 3.78% yield, which I think is healthy. And they're instead putting it into things like high yield savings accounts, which are paying a 4% plus yield, or bonds, US Treasuries, which are paying 5% plus, or other stock market investments like JEPI. That's a popular one I see, and it pays a 9.7% yield. But I feel rate pauses and reductions are on the horizon due to continuous decreases in inflation CPI numbers month over month since June of 2022, when they were at the height of about 9%. Now the CPI is about 5%, and the Fed's goal is 2%. So we're moving towards that 2%. And once rates pause, and especially if they get reduced, investors will start to pour into funds like SCHD, and that will push this ETF back up massively because the high yield savings accounts, the bonds, the US Treasuries, their yields will start to decrease at that point. And really the stock market as a whole will go up when this happens, but especially dividend paying stocks as investors diversify and reallocate, again looking for attractive passive income plays like SCHD, which you also get to add the appreciation of its stock price, and that's a great combo. It's a win-win. So this is why I think soon we could see SCHD rocket back up when the Fed starts to pivot. Third thing is, if we look at the analytics and the history of SCHD, let's look at its dividend yield history. In fact, this chart shows the last 5 years, but this stands true for all of its history. Right now it's at a 3.78%, that circled red on the very right. The only time the yield has been higher than today, when I'm speaking at this 3.78%, was at the height of the pandemic, and it was at a 4.26%, which means right now it's at the second highest in its history, the dividend yield, which I think people will start to see this and start to get back into this, being that it's at its second highest in history. So keep that in mind. I think once this gets out, people will start to buy in heavily again, and it'll send the stock price up and that yield back down. And so I think this is another reason why now is the time to buy. Another thing we can look at analytic-wise is the price target. This is something that's always fun to look at. Now this is out of 894 ratings. That's a lot. And right now there is a 15% upside potential over the next 12 months and has a target average of $80 with a low of 65.5 and a high of 94.71. I do think in a year we'll see SCHD back in the $80 range, so I do agree with that 15% upside potential, which is another reason to get in, because you not only get that 3.78% yield, the second highest in history, but you'll get to add over the next year 15% appreciation in the ETF stock price. Now, I did this for fun. I took its stock chart over all of its history. I drew a line, what I feel is like about the average growth, and right now, we will see that the stock chart is going down towards the lower end of this orange range, which means it could be hitting a reflection point and headed straight back up. Of course, anything can happen, but I think now is the time to buy at any price at $70 or below. Now the moment you've all been waiting for, I want to talk about my big purchase of SCHD, and let's start with looking at my portfolio performance. So if you like this type of content and this transparency that I share on this channel, be sure to subscribe. Right now I'm in the green, 3.75%. That's a little over $2,100 in the green. If you take your attention to the very bottom left, there's my SCHD holding. Last video, when I shared with you guys my portfolio performance, before I made this big purchase, I was at a 9.8% allocation of my portfolio with SCHD. Now I'm at 17.78. It's in that purple section. So I've nearly doubled my holding. This also brought my largest sector, the tech sector, down from a 23.7% allocation down to 21.5%. Of course, it would have been a lot more, but Amazon has been going up massively, which is keeping it high. But regardless, I am diversifying my portfolio more. So I now have 150 shares of SCHD, and my goal is 1,000 shares. So I'm 15% of my goal, 15% of the way there. And follow this channel to see me get there, and I will keep you updated along this journey to 1,000. So again, to summarize, due to the banks nearing a turnaround in my opinion, due to rates being close to a pause or reduction, and due to the history and analytics of SCHD, I believe now is the time to buy below $70, which it keeps going above 70 and then dipping below, which tells me it's at this point of resistance, and we could see it pop above 70 and just stay there. So of course there can still be some possible storms ahead. There's three things I'm keeping my eye on that could send this stock going lower. That's the debt ceiling crisis, inflation could see a month or two of reversal, and any geopolitical negative developments could push SCHD lower. But keep in mind, these things, you don't want to count on them. You just want to buy a good quality ETF, and my plan is to buy below 70, which I did today. I made a big purchase, and I'll add heavily each extra dollar value it goes down. So if it goes down to 68, I'll buy heavily 67, 66, 65, so on and so forth. But be warned, I've seen it happen all too often. Investors see a good deal, but get in this game of it will go lower, and that's dangerous because it could pop back up and never get to the point it is now, and you'll regret not just making that purchase that you should have. So you might miss out and have to buy higher. And just look at what I went over in this video. All the things I covered. I really believe SCHD is a great buy at $70 or below for long-term investors like myself. So do you agree with me that now is the time to buy? And if you feel like it, I think it'd be fun for all of us to share how many shares of SCHD we hold, and let's encourage each other to build up this high quality and highly rated dividend ETF that will help us generate healthy passive income. Again, I'm at 150 shares. My goal is 1,000. So stay tuned. I will definitely keep you updated on that. I hope you guys have a great day, and we'll see you next time on Mark Arnold's Finance.